You're watching Reality Check. The International Monetary Fund has released its latest World Economic Outlook report, and the big headline is not so much India this time, whose growth projection is unchanged, but the downgrades for China and the US, two major engines of global growth. To take us through this and more, we have with us Chief Economist of the IMF, Gita Gopinath. Always great to have you back on, Gita Gopinath. Thank you so much for joining us. Let's just start with, as I said, the main kind of headline from your latest report, where you're saying that the forecast for the US and the China has been slashed. US growth is down by a whole percentage point from 7% to 6%. China is down by just 0.1%. Let's just start with the US first, Gita Gopinath, because, these two countries are the major engines of global growth. Tell us a little bit about why there has been this fall and what are the concerns for the world. And as always, the request is to try and keep the language as simple as possible. We don't want to get too technical for our news audience.
Hi, Srinivasan. As always, a pleasure to join you. So for the global economy as a whole, we have a very slight downgrade of minus 0.1 percentage point. Now, that is driven by some more substantial downgrades. For the US, we have, like you said, a percentage point downgrade. The main factors driving that are we saw what we saw in July and August in the US in terms of the Delta variant. So you had some of the same problems that we saw back in India, earlier in India. So we have the Delta variant. Because of that risk, cut back on the momentum in terms of the recovery in consumption, people going to restaurants and meals and so on. So we saw consumption flatlining in the US. And you also have supply disruptions that continue because of shortages of chips and therefore in terms of purchases of cars and so on. So those were the two main factors for the downgrade for the US. Right.
And in terms of how long you think it's going to last, or could it get worse? Because when you look at the impact of the pandemic in the US and you look at this ongoing, almost seems like a battle, especially to those of us watching from afar, over all these issues of vaccine mandates and mask mandates, where this is not now just relegated to the fringe because there are anti-vaxxer ideologies all over the world, but you have people holding office who are pushing for or pushing back against the idea of these mandates. Given that kind of a climate, do you see the sort of the impact on the economy? Do you see the fact that the pandemic would continue to persist, and could that further worsen America's growth prospects?
There is vaccine hesitancy in the US. And if you look at the overall numbers for the country as a whole, they're 60-65% in terms of vaccine coverage. The problem, of course, is that if you look at the geographical distribution, there are states where it's much lower.
Yes.
And that is exactly the source of the problem. But I think everybody's understanding that you really need to get to much higher vaccination rates, especially given how transmissible the Delta variant is. And there is a push on that front. There is more features that look like mandates that are being put out there. But again, I think it's quite clear for the world as a whole that you really need to get to much more substantial vaccination rates. You have to bring down vaccine hesitancy. And of course, there are countries for which it's not vaccine hesitancy. They just don't have vaccines. And that is a problem in low-income countries.
That's right. And we'll get to that in a second. The other question I had for you is that one of the factors that you've taken into account when you've shaved off that 1% growth, but looking forward that, it won't be worse than that, is the assumption that the government, the Biden administration will be able to push not just the $1 trillion infrastructure bill, but there's also this anticipated $3 trillion social policy bill. But again, some people are saying, given how politically divided the country is, its politics are, and how everything gets deadlocked through the legislative process, that may not happen. And were that to be the case, could the US further get impacted growth-wise?
So that is indeed one source of one downside risk to our US numbers. Now, of course, we're also watching what's happening in Congress and the likelihood of these bills being passed. So we debated about how we would maybe alter these the package that we put into the analysis. The problem, of course, is that the details really matter, because while the current projections have the assumption of about a $4 trillion package that gets passed overall in combination, but remember that includes that spending of $4 trillion, but there's also sources of raising the revenues for it. So even if it completely doesn't close it, there are tax proposals in there which will raise revenue to pay for much of these spending.
Okay.
So again, the question is, you could end up with a much smaller package eventually, but if it is the case that with that tax rates come down too, then again, the effective stimulus for the economy could be about the same. So, what I'm trying to say here is that the details truly matter about what the spending is, where it's done, who's going to be taxed, and so on. You could end up on net with a very similar effect with the smaller package.
Okay. Let's talk about China now. The downgrade is much less, of course. It's just 0.1%. But there are people, analysts and commentators, who are pointing out to many more deeper systemic problems with the Chinese economy. We saw recently the collapse of Evergrande. This is the housing giant, supposedly in $400 billion of debt, which many saw as an indication that there is something about the Chinese success story that might be more fundamentally slowing down. That's not reflected in your numbers, though, but is that something that you're also concerned about? Is there any evidence of that?
So, Srinivasan, the regulation of the property sector in China started last year. Because we knew that this was in train, we expected that would slow down investment in the real estate sector. It would have a negative impact on the real estate sector. So that entered our projection earlier. We already had a downgrade earlier this year for China, which reflected that projection, which is why in this time around, we have only a smaller downgrade, but it was because it was already baked into the forecast previously. But to your question about the risks, I think there are indeed significant risks. The property sector is a big part of China's economy. Evergrande is the biggest property developer. So, that can have some pretty serious ramifications. Our view is that the government has the tools in the policy space to be able to ring fence the problem, to prevent it from spilling over to other sectors and therefore damaging growth more substantially. But again, I think there are significant risks here.
Okay. The other concern coming out of China, which I think you also refer to, is about the energy crisis, right? Coal prices are shooting up around the world. China is amongst the countries which has been impacted by that, and of course that's having a ripple effect in India. Tell us a little bit about how much of that is a concern.
In terms of the near term, I would say that is a very important risk for the global economy. But I'm going to say that as a near-term phenomenon, because if you look, say, 6 months out, and you look at futures prices, those prices are expected to come back down. So once you go past the winter, you should see, natural gas prices come back down. Also, we will need some luck, which is that if this winter turns out to be normal, then we would not see another further big spike in these prices. If it turns out to be severe, though, then you could end up with countries just having shortages and power outages, and that could be much more disruptive and then have a much longer effect because it affects consumer sentiment and business sentiment. But again, overall, these are transitional factors.
Right.
And in the case of India, of course, there's also the idiosyncratic pieces, which is about the heavy rains that affected coal production in India. And then, of course, turning around and importing coal then became hard because prices have gone up so much. So I actually think for the near term for India, this is an important, what's happening with coal, also what's happening with oil prices going up, I think pose near-term risks for India.
Okay, let's talk about India then, because you forecast for India, your forecast is unchanged, 9.5%, highest in the world. This has made the government here very happy. Even though, but we've had this conversation in the past, some of this is what is called the low base effect. And I think in the last conversation, you described this as almost mechanical growth, that it's a kind of statistical thing. It's coming off this big contraction of minus 7.3% in the previous year. But beyond the kind of mechanical aspect to it, are you seeing any positive signs coming out of India which suggest that there might actually be something real in the uptick?
So after a very deep contraction last year, like you said, of minus 7.3%, there is bound to be a rebound, and the 9.5% captures that rebound. But if you look at overall growth over 2 years, I mean, that was basically lost growth over 2 years, right? So in terms of the recovery, you really want to look at the distance to where the economy would have been in the absence of the pandemic. And it's incomplete. There's still a distance to travel. And also, I would say that there are uneven effects. There are some sectors that are developing, some workers who are able to continue working while others are not. So the effects on employment are still quite severe, and that needs to be addressed too. So again, the good news is that after the deep second wave, you see in high frequency indicators, you see a return in manufacturing, in services, and that's very welcome. The question is about maintaining that momentum going forward. And I would say that the area which probably would be the growth engine for India would be from public sector investment, public infrastructure investment. And you are seeing a lot of action on that front. So I think that really would be one area where growth would come from.
Right. Yes, there has been quite a lot of announcements on the infrastructure front. But one of the concerns is, Gita Gopinath, and we've spoken about this earlier as well, is that the growth numbers don't capture the informal economy, which, as you know, makes up a big part of the Indian economy. And those are the areas which are really hit hard.
So this is the part when I said that the recovery is uneven, was precisely that, which is, for instance, if you look at firms that are listed on the stock market, they have rebounded well, they're in healthy shape. But if you look at many medium, small, and micro enterprises, they have had a big hit from this pandemic. If you look at employment similarly, including the number of people who have yet to return to the workforce, there is still a distance to be traveled. And you can see that in terms of the number of people who continue to use the rural unemployment insurance money, right? I mean, that's still around 50 to 60% above pre-pandemic levels.
Yes.
So again, there are many pieces of this that some of this will resolve itself once you have a few quarters of steady growth and steady recovery. But you have to pay careful attention because, again, we're living in very uncertain times. We just talked about energy shocks. We still have not completely gotten rid of the pandemic. There is the risk associated with virus variants. There's the financial sector risks that are still there that precede this crisis. So again, vigilance on all these fronts is very important.
Right. Because, we still haven't seen the government actually start to do those cash transfers that so many people have spoken about, including yourself, in terms of significant amounts of money being transferred into the hands of those, particularly at the lower end of the spectrum. And that's why consumption is still down, though it could pick up as we approach the festival season. Is that kind of continuing conservatism by the Indian government, is that a matter of worry?
I mean, the Indian government did deploy, its resources for many aspects, initially in terms of the transfers, in terms of in-kind transfers too, but also in terms of loan support and so on. The way we see it is that more can be done, that there can be some more fiscal support that's provided in the very near term, and that would be for vulnerable households and for the health sector. So we do believe that there could be an additional increase in the fiscal support that is provided. And of course, you unwind that over time. But what's also important from the fiscal aspect is that there is a very clear medium-term strategy for how you're going to keep the fiscal deficit in control through revenue measures and expenditure measures. And that helps you right now because it signals to the market that you will be on a good path, and that reduces your cost of borrowing. And again, that helps with doing what's needed at this moment.
Right, which is actually perhaps also one of the reasons why we've now seen rating agencies like Moody, they've revised India's outlook from negative to stable and so on. And also the vaccine drive, which initially was faltering, but seems to have picked up steam, even though we're still quite a way short of targets. Is that again going to kind of help cushion India compared to other countries which, as you mentioned, I mean, either you have problems of acute vaccine hesitancy in countries like America, which are flush with vaccines, or parts of the world where they just don't have vaccines?
I mean, one of the reasons we have the growth numbers that we have, which is 9.5% this year and 8.5% next year, is because of the success on the vaccination front. I think it is, hugely commendable that with such a large population, you already have 50% of the population with at least one dose of the vaccine at this point in time. So that is a source for, the confidence that the recovery will continue. But again, the kind of variants that we are seeing are incredibly transmissible. And so you have to get to some very high levels of vaccination. Now, there is a combination of, immunity that you got from having, gotten COVID combined with the vaccination. So there are many parts to it, but I would say there's still the risk that, there could be a third wave. I would say, that remains.
Right, and especially because even while individual countries might be doing better with their own vaccination drive, this whole idea that, until everyone's safe, no one is safe, will remain a problem. When you look at this question of vaccine inequality, which you've spoken about quite strongly in the past as well, from our last conversation, where do you see it now? Is there still an acute vaccine inequality with many parts of the world, especially the not so well-off countries, still struggling to get their vaccine stocks?
So if you look at the numbers, Srinivasan, the target was to get to 40% coverage in every country by the end of this year. At this point, based on current projections, 75 countries will not get there. So there remains a serious problem. And if you look geographically at the world, and I look at this all the time because we have all these projections, is that it's the African continent where you are seeing the biggest deficits. I mean, that is where the biggest gaps exist. About 4% of the population has been fully vaccinated at this time. So that's the distance, that's where the attention has to be focused on in getting vaccines to these parts of the world, to low-income countries. And it can be done. It can be done if you just look at the manufacturing, what's in the pipeline these next couple of months, what pledges have been made by countries in terms of dose donations. It can happen, but you just need that bigger push. By the way, what's also very, very important is what India does on the export front.
Sure.
And the fact that there was recently announced that because of the coverage that now exists in India, you're in a comfortable place to start re-exporting. The low-income countries, the ones that are getting their vaccines through COVAX, depended a lot on the exports from India.
Right.
So resuming those exports certainly helps.
Okay, well, let's see if the government is able to keep to that commitment. In conclusion, Gita Gopinath, what would you say would be, particularly for countries like India, developing countries, based on the trends that you picked up in your report, to be the areas of concern to look out for, particularly when you look at what's happening with America and China and the industrial north, which is where your report picks up, where some of the slowdown has happened? What should be the concern points going forward?
This recovery from the pandemic has had this feature of, first of all, being stop and go, and because of which you've seen these big supply and demand mismatches, which is the demand comes back up, but supply isn't ready to go. And then you're seeing these big spikes in prices. So for India in the near term, the coal sector, the fact that the oil prices are going up, these are the kinds of issues that we're seeing in other parts of the world too, which have an impact on energy prices and then can lead to power outages and so on. That's one thing. The second aspect, of course, is, and this India is doing well, but and continues to need to do, is just to vaccinate, right? That we know is the way to maintain, address this pandemic, keep consumer confidence high so that they can go back to their normal activities. So I would say that these are some of the big issues. Inflation, I think, is an important issue even for India. Core inflation is high and sticky in India, so that is another important area to pay attention to.
Okay, well, important signals there to be kept an eye on, but great to have you on, Gita Gopinath. Thank you so much indeed for talking to us.
A pleasure. Thank you.